Well, today on the Early Stage podcast, we have a new acquaintance, JSB from Caret DeFi, which is a yield bearing stablecoin platform. And stealing your words, it's like LSTs for stablecoins.
Yeah, it's a
Yeah?
good way to put it. Great to be here. Thanks
Perfect.
for having me on, Dirt.
Yeah, man. It's awesome to meet you. Welcome aboard. For the people that haven't met you before, give us your backstory. How'd you get into crypto, and what eventually got you to Caret?
Yeah, man. So I've been full time in Solana for almost 4 years now. It was really the Degen Apes brought me in to Solana, or just like piqued my interest to come check it out, and came for the vibes, stayed for the tech, and then somehow the gravitational pull never let me leave. Um, I my first exposure into crypto, I guess, was around 2012 when I bought my first like Bitcoin
Damn,
stuff.
nice work.
Yeah, wish I had held that. I was graduating college at the time. Go ahead and age me as, a crypto boomer in my mid 30s here, which is
No, me too.
fine. There's more of us than people realize.
So true.
Um, and thought it was like novel. This is cool. I just like trying new tech out, but didn't really. It seemed the meme coins weren't a thing then, but like I realized that's how I felt about it. It was like, okay, kind of greater fool theory. Sir, what does it really cost me to hold this? I didn't hold it. Broke college kid. You had to, buy beer for the frat house, whatever.
You're buying pizzas
Um,
and shit with Bitcoin.
yeah, right. Uh, and so then, Ethereum then kind of piqued my interest. It's like, okay, I see we can actually do stuff. This is interesting. Programmable money. This idea of like permissionless but on-chain enforcement. Started to make sense. Started to like play around a little bit there, but quickly got disenchanted with it. Of like, we can't actually do anything. This is dumb. Um, Not dumb. I shouldn't say that. Just this is less useful to build like consumer level stuff.
Early,
Eh,
real early.
Early, yeah. Um, and my background, I'm a developer. I'm self-taught developer.
Nice.
Got into it later. Um, you know, I've always been in the startup scene. My first venture was a carbon fiber wheel manufacturing business. This is back when like direct to consumer was the hot thing.
Nice.
It's like when DTC companies were first starting out. Um, and
Road racing or downhill biking or like.
mostly triathletes. So kind of deeper
Sick.
dish, like 80 millimeter, 50 millimeter, aero wheels, carbon fiber,
Okay.
and we manufactured overseas in China. So did a lot of overseas manufacturing experience, and then imported those and did direct consumer.
Sick.
Um, the thing is, like, I hated it. uh,
Cool in
like,
theory.
yeah. Well, it's like at the time I was young, and I thought like I just liked business, and like I liked doing the back end stuff, and the logistics, the operations and stuff. But it was really hard. And the lesson I learned is, man, you gotta like love the product. You can't work 80 hours a week when you like don't like the customer and you don't use the product,
Yeah,
like straight
fair,
up.
fair.
And so I was really fortunate. Was able to I sold that business in 2013, and that gave me the means to kind of do what I wanted to do. And so I founded a digital strategy agency that I ran for about a decade after that. And that was my way of getting exposure to a lot of different companies and like building stuff. So both like website stuff and back end systems, kind of ERP type stuff for small business. Got a lot of exposure to a lot of interesting companies and problems, and had a blast doing it.
Okay.
But I
Okay.
got really bored. I got really bored. Just it was kind of like the same thing in and out. I had scaled a team up and then scaled a team back, and was working by myself again. Um, and crypto really was kind of this, man, you need to like adapt or die. Like you're into tech, you're kind of helping a lot of people with their tech, but like you're not evolving or getting better. Like learning new skills there. And crypto had already piqued my interest once, and so I said, hey, like I'm gonna dive back in. I'm gonna go become proficient in Rust. I'm gonna go learn new skills, new stuff. And man, just immediately, and I think a lot of people have this experience, just like fell into it and like loved it. NFTs started kind of kick that off. I was like, oh, that's pretty cool. I like that. Uh, Joined that community, and kind of saw the future of like, oh, done right. This is my theory of like NFTs in the beginning. It was like done right. this is like a breeding ground for like launching new companies, right? This
Oh
is
yeah.
like an initial user base. This is like people who will trust you. You built a reputation over time, and it's a distribution channel for like you building stuff for people who like care and like
Yeah.
want to
Yeah.
know.
Yeah.
And so yeah, I was bored, so I had a lot of free time. So dove in, started building random stuff, getting familiar with it, learning about the SVM, learning the tooling, and this is like early days of Solana. So things were truly chewing glass is the right, you know, way to put it. And it made a lot of sense to me that, or it became apparent that like your reputation in an anonymous online world matters more than anything else.
Yeah.
And it seems counterintuitive in some ways, but building that trust over time makes a huge difference. And so I was really fortunate just to make a lot of great friends, make connections, and was kind of biding my time to figure out, hey, when am I going to launch? What am I going to do? What's the right opportunity? Kind of trying to figure out, hey, what are problems I feel like I can solve? Kind of looking for like founder problem fit, I'd say. Um,
Yeah. Yeah.
had good experiences before, kind of knew what I was doing. It wasn't my first rodeo, and so it was just kind of waiting. And I had the luxury to do that. Um, and NFTs were so big. I enjoyed that, built a lot of tooling around that. And there's a company you might be familiar with, B&J Studios. Bartaj and Jordan, who were really
Okay. I
responsible
know.
for creating NFTs at
Okay.
Metaplex. Um,
Sick.
they they convinced me to come work on the Raindrops protocol. And the Raindrops protocol was we built this product called Boots, and it was the NFT trait swapping trading platform. So we like tokenized traits. So like NFTs had traits, but those traits were like this JSON blob. It was really unreliable. And so we said, hey, like let's tokenize those as SFTs. And then the NFT owned the SFTs, and now you could like trade those. And then when you like equip new stuff, a new image would render. It was all on chain. It ended up being a way cooler system than anyone really understood what was going on under the hood. Like this was like compression on chain. This was like you could package things, zip them together, and like send information, then like unbundle them later. It's actually much cooler than people probably ever realize. But we were building for
Damn.
NFTs when NFTs died, and
Mm,
and there really
which
wasn't a
they
viable
did.
business there, unfortunately. But through that experience, I met my now co-founder Jack. He was the CTO there. I was the COO over there, and man, like we really hit it off. Just kind of a yin and yang. We're both engineers. He's much more proficient on the back end, smart contract side. I did a lot of the front end and strategy work and design work and all that. And we left together from Raindrops B&J October 23, so in end of 2023. And we spent the next couple of months just figuring out, hey, like what can we build? What can we do? What are the ideas out there? We're really good at like reading on chain and getting information on chain. We felt like that was kind of a starting block of like really good with working with on chain data. Um, what problems need solving? And through a lot of iteration, a lot of stuff, that's really how Carrot was born. At the time, the first, some founders, like if there's founders listening to this, sometimes you just start with like, what's the first like pebble in your shoe problem? Like, what's the like little minor annoyance that like irks you that you wish could be better? Um,
I like that. That's a good analogy.
Fix that, and then you're probably not alone. You might be alone, but you're probably not. There's probably somebody else who like also has that pain. Um, and for me, it was just the experience of using DeFi like sucked. I just thought like it's got to be better. And the first part was I hated the UX of DeFi being based
Hmm.
on kind of a vault system where the wallet pretty clearly to me had become your home page, like your front page of like if it's in your wallet, like it's how you check your balance, how you check your performance, how you check anything. You're looking at your wallet. But when you use DeFi, it like left your wallet. And so you had to like go connect to a variety of dApps across the ecosystem to go see it and to check on the position and stuff. And at least at that time in DeFi, things could get wild. You know, you really had to be on top of watching, okay, this is changing, this is fluctuate, even just like stablecoin rates. And it's kind of like where we landed of saying, hey, there's an opportunity, an algorithm is going to do this a lot faster than I could do it manually. The rate between MarginFi and Drift and Camino and at the time Mango and Solon Save, very similar risk profiles. I'm not moving enough size to where I was really affecting markets. at all. And so like me moving from Camino to MarginFi to get, a 20% rate instead of a 7% rate over time, like makes a difference. And so we said, all right, like let's solve that. Like we could do that. Computers can do that 24/7 a lot faster than we can as humans. And Jack then had pushed hard and said, hey, like we should tokenize that. And that's kind of like what we felt like we were really good at, was like tokenizing things and like making data representations on chains of transferable assets. And it made a lot of sense because to me, like this small UX issue of it just doesn't leave your wallet. You get to see your DeFi position as an asset in your wallet, and can track the performance directly through the token price.
Yeah.
And there's a whole other set of things that become unlocked at that point, right? It's
Yeah.
composable, it's interoperable. You can use it as an asset, as collateral. It's much more tax efficient. Not tax advice at all, but for most places in the world, it's a capital gain, and you're only going to pay that once you sell it. And so if you're able to accrue, your yield into a token that's depreciating the value over time, you are not paying like income on that, which most places technically you are. If you
Then you just
want
then
to,
you just borrow against it.
and then you just borrow against it. Yeah,
Yeah.
exactly. And there's just this sense of, hey, can we make DeFi available and accessible to everybody? And the thing about crypto that like it gives you this default UX. Like, what's the easiest thing to do in crypto, or like the first thing you have to do aside from like on ramping and getting a wallet and stuff? Like, it's token ownership. Like that is the core of what working and operating on chain really starts with, is like token ownership. And if you came to Solana for a meme coin, you could also stay in Solana for DeFi. And DeFi doesn't have to be unapproachable and scary. Like,
Yeah.
even now,
Agreed.
this is still true of you log into Camino now, or a lot of these platforms.
Hmm.
We kind of think it's okay and like expect to see 50 to 100 options of things. But like, man, it's overwhelming if you have no idea what those stuff are, like
Totally.
what that is.
What
Um,
tab are you on? Why do I see the same thing twice? How do I understand the APY? Is it going to stick around?
yes,
Which ones are boosted? When's the boost running out? There's a lot of layers and
yes,
complexity.
tons.
Wait, do I got to go to
Uh,
JLP first to deposit there to get that token
mhm.
and bring it back? It's yeah, for sure, for
And
sure.
it's just overwhelming. And for a lot of people, it keeps them on the sidelines of using DeFi. They're like, I'll just own the token. That's fine for me. And we wanted to make it possible for you to experience and the benefits of DeFi within this wrapper that you're really comfortable with, which is just token ownership. And frankly, people like tokens that only go up, right?
Yeah,
It's always green.
I was just looking at the chart, and I was
Yeah,
like, cool. It clearly
yeah,
works.
clearly works, right?
It clearly
Um,
works.
so that was a lot of the origin of where we started. It's one of those things that we did it not because we thought it would be easy, or we did it not because it was easy, but we thought it would be. And there's always dragons. There's always unknown unknowns when you get into
Hmm.
it, and the problems get complex. And frankly, it's a good thing, because it keeps us really engaged with, hey, how do you do this really well? How do you deal with things like rate compression? And so maybe I'll like fast forward a little bit of like that's origin story. And I think every great company starts with like an initial pain point you solve, you do this, and then you uncover
Yeah,
more pain points as you go, and you start to like understand, and your level of sophistication and depth of knowledge grows, as you like just swim in that water for longer. And for
that's that's
us,
a that's a really good time for me to just give credit to Seb and the podcast you guys did last
yeah,
August. Anybody, I recommend you guys to go check it out on YouTube because it really does a really good job. And you guys walk all the way through audits, the origin story, the product,
mm-hmm.
and it's really well done. And so, yeah, if you want to talk about, some of the things you've learned since then, like you were probably just about to start doing, hit it.
Yeah, shout out Seb. Another DAA connection. That's how Seb and I
Nice.
got to know each other, just through the DJ Apes.
I love
And
that you're
Seb's
still
great.
rocking the PFP, by the way. I had
That's right.
one. A lot of my friends in old trading circles bought a lot of them. I think he's got some real nice ones still. It comes a point you can't sell it.
They're
It's like,
nice.
very nice.
I've always thought of myself as a leopard print gorilla.
Absolutely. Actually, before you talk about new stuff, you said something that really struck a chord that I liked.
Yeah.
And I just had on my buddy Seb Moriarty from Phase Labs, and we talked a
Hmm.
lot about NFTs. And then prior, I had my friend Kip Paddle on, and we're both part of the Lucid Drakes. And
Oh, love Lucid.
NFTs may not be like the shiny thing that everybody wants to buy. You know, the people in the space, the builders, like I talk about all the time. You just talked about it. It takes you places. It's like your best fans, you know, your power users, the
Hmm.
marketing circle. It's all in there. You find a community and you put in work. You chew glass. Like if you
Hmm.
stick around, things happen.
Yeah, totally. Uh, frankly, it's like it's where all my connections and people I know or relationships that I've formed with people I see at conferences now.
Yeah.
It all starts with those communities. Highly recommend. You got to join one. Pick one that works for you. Dive
If
in,
you're
commit.
if you're in your mid 30s, you know, go join the NFT community.
Yeah, you got to do
Spend all your time
it.
perpetually online. To do.
That's right. That's right.
Anyways, new lessons. What have we
Anyway,
learned in the last
yeah,
9 months? What's happened?
yeah. Gosh, hope I've learned some stuff. So one of the things, and this goes back to like Andrew Cronje, but back in the day, Yearn.
Mm,
Yearn's the OG
mm,
example of this. Like what we're doing
totally.
is not new. It's
Yeah.
hard to like invent something new. And Yearn solved this same problem. There's like he would wake up every day, he would pull the rates and say, "Let's move the money to the best rate." And then he's like, "Everyone else would like to do this." Boom, company. Um, and Solana gives us some unique advantages of how we can do that. Solana, we can be really reactive, so we can like see rate changes. We have like a very robust monitoring system of on-chain data of you know those rates are set by utilization ratios of watching the on-chain accounts. There's no like rate setting, there's no like Fed, there's no like someone like pulling the strings here. And so we do a lot of data ingestion and monitoring for these systems. And we can be reactive to like, oh, we see these rate changes, and because of Solana's low fee and fast environment, you can respond really quickly to these things.
Is
Um,
that in-house Oracle or are you guys using a third party? Like,
Great question, actually. We use both Switchboard and Pith for
yeah,
a lot of Oracle work,
yeah.
but we also ingest all of our own data as well. But here's the deal.
Proprietary.
Maybe this gets into too much of the weeds, but like CRT is dollar denominated, so it's
Okay.
USD based. But technically, what it is, it's an index of stablecoins. So we have USDC primarily, USDT, and PYUSD in there, and all those have their own Oracle price. And just like there's a fluctuation around one, and technically, like CRT can be affected by those micro movements of the value there. I actually debate this a lot internally of should I show our APY based on this USDC value because that truly doesn't go down. But sometimes like CRT will have these little dips. Well, it's because USDC itself is like kind of taking it down.
DPEGs, DPEGs aren't impossible.
Not impossible, but even here, this is not even like DPEG territory. This is like within like
Yeah.
thousandths of a penny.
You were
Just it's
talking
the
you were talking
natural
jitter
flux.
instead. Yeah.
Yeah, yeah. Um, and so like we have to monitor and watch all those things, and it gets complex fast.
Fair.
Uh, So one of the things like Urine went through this, everyone goes through this, is when you get to a certain size, and for us, we even found once we hit like 7 or 8 million, we found that we had a lot of influence over the lending markets. And certainly, like once we got up to 15, 20 million, we noticed that for a period of time, because of us and some other aggregators in the space, the value of what an aggregator can do for you just goes to zero. There is no net good anymore, and that's due to rate compression and rate normalization across markets. And so, what used to be a huge benefit, where we'd say, "Hey, CRT or any aggregator would tout and say, hey, you're going to get an overall better rate than a single venue would offer you. If you just deposit in main pools Camino, let's say, we would say, hey, we're always going to get a better rate because occasionally there's a better rate somewhere else. And so, like, we're going to get it there, and then we'll come back, and then we'll go there, and we'll come back. So, like, our average is always going to be above, single venue. Um, but the reality is, because of our presence in the market, you think of how these rates work on utilization ratios. What happens when there's a spike? A spike means that there are more borrows than they're comfortable with, and so it's pushing up the rate curve. And that mechanism works because it attracts supply to come in. But when you deposit supply in, what does that do? Like brings the rate down. This is the health of the market. This is a good thing. But because of aggregators, what's happening all the time is we're all looking at all the rates everywhere. And when a rate is high, we're all depositing money into it. Well, what happens when you deposit money into it? It brings the rate down. And what happens when we remove money from this market? Well, when we remove money, that brings that rate up, right? And so you start to, if you do it correctly, you can do this poorly where you're seesawing the market, and you're always losing because you're trying to chase too much. So we wrote a fairly clever algorithm, I'd like to say, that helps like scale in and out of these things to where over time, we start to compress everything. So you can look even at the rate data for the last 6 months and see that there really no longer is any difference between markets across the board, across USDC, USDT, and even PYUSD. Those rates have become normalized within, frankly, 20 basis points, maybe a
Wow.
little more.
Wow.
Um, this is great. This is like healthy for the market. This is
Yeah.
wonderful. Nothing wrong with this, but just over time, like this erodes the value of any aggregator, right? So like for us, for like Lulo, for anyone else out there that's doing like any sort of aggregation, this is the reality of what happens. And um,
A
frankly,
hunt to
there's no
zero type situation. A
not
race to
quite, but
zero.
no, not we're not like moving the rates down to zero necessarily, but we're just making sure that
Oh,
whatever like the prime rate is normalized together.
not necessarily that the rates go to zero, just like maybe your guys' profitability and the arbitraging of them.
Yes. Yeah, and frankly, you're taking on extra smart contract risk by using anybody like us. You get all the protocols risk plus our protocols risk.
Yep.
We were audited multiple times over. We do everything we can to mitigate that, but it's still real. And you're no longer really getting compensated for that extra risk that you're taking, in my opinion.
Okay.
Um,
Fair.
and even more so, there's really no business model there because if we're all really competing on rate and the fact you're going to do better than just being at Camino or just being at Drift, um,
Yep.
if you start shaving, you know, performance fees off of that, you're now below market pretty quickly, and you'll lose TVL quickly because it's so easy to switch. And so it just seemed like the writing was on the wall that, hey, what used to be true of like the market before, where we saw a business could be built here, isn't true. However, the value of what we've created is still really, really valuable. And so what can we
Hmm.
do? Like what pieces do we have here? What becomes possible? Where's the real business to be built? How do we create the most value for people? How do we stay in line with our vision of making DeFi, available and accessible to everybody? And because of CRT's unique unified liquidity model, which is kind of a superpower for us, like all those funds, like we are managing the full amount of the TVL, which allows us to again scale in and out. It means that it's less PvP. You might not realize that about a competitor of ours, is that it actually ends up being kind of PvP. Like who gets the rate spike? When did they decide that gets moved over? When you're operating in segments and silos like that,
It
you can't leverage the advantage of unified liquidity.
it reminds me of like the convex wars and like
Yes. You.
hidden hand and people being able to do bribes. Okay,
Yep.
who's bribing who this time?
Yep.
Beauty. God, miss
Uh,
those
it,
days. I don't miss those days, but I
you
miss
don't
those
miss
days.
those days. You think you might. uh, and so the
Anyways,
unified liquidity model, you kind of look at and say, okay, technically, what are we? We are paying out supply rates. We're downstream. We're kind of like post profit for everybody. And the hardest thing for any new DeFi protocol is attracting initial supply side liquidity. Like who's going to supply for the borrow? Who's going to take the most risk of like first capital in to like kick
okay.
off this market to go? But if you look at like we've got, I don't know, 15 million in
Yep.
TVL of people who have trusted us with their money to say, hey, like we're expecting you to get the best risk adjusted return on our stablecoins that we can get. And it made a lot of sense. It said, hey, like we should build DeFi products exclusively for Carrot liquidity. Um, you know, we should start generating our own yield. So native yield for us, was kind of this unlock of thinking, hey, this is what makes a lot of sense where we can build like sustainable and enduring yield that our users will benefit from. That we can do some stuff with
Hmm.
this vertically integrated markets that our competitors really can't. And all in the name of like we can provide the best experience. One of the things you mentioned, you touched on this earlier. The APY game is super frustrating because there's like no disincentive to lie. And I see this a lot. And I used to watchdog and man, I've got spreadsheets all the time of like, what's my real APY? Like you sold me this, but like here's what I deposited, here's what I exited, here's my actual return, but you told me I got this, and those numbers don't even come close to adding up.
Amen.
And somehow we convinced ourselves at some point uh, that points translated to yield, or like token emissions, there's some worthless token that they just made up, like translates into
Yeah.
yield.
Yeah.
And you might get something out of that someday, but in the points case, you're taking like a pretty future bet on a TGE event that you don't know if it's ever going to happen, right? And hopefully you can exit. Hopefully you can do that. And APY is like an hour. Like the fact, the smaller the slice you take in order to sample out APY, like the least like
Right.
it's no longer accurate. It's
Yeah.
insane. To like assume a yearly return from like a 15-minute data point. That's dumb. But we do it. And it's
Totally.
because that like everyone's trying to compare it as if it's apples to apples, but like it's apples to like aardvarks. Like it's not even a fruit. Like sometimes these things are so different that to like try to like look and do like a here's a recap of all the available yield. Like that's not real. Like there's $15,000 of liquidity in that PT, future token. Like no, like that is not the same thing. Anyway, I'll get off that.
No, it's good.
uh,
It's a good point. It's a good grandstand
yeah.
on a shorter list.
And
But
so
yeah,
we wanted to say, hey, can we reward people for the risks they're taking being first in capital into the lending market directly with taking a share of protocol level profits?
say that
And
again.
so we,
Run
yeah,
that back
yeah.
for me. That was good.
Like, can we reward people and compensate them accurately for the risk that they're really taking,
Okay.
for being first in capital into a lending market,
Okay.
without points and incentives by sharing protocol level revenue back with them? And by
And so
protocol level revenue,
this would be like a carrot pair with some
ooh,
other.
not quite. It's actually better than that, in my opinion.
Okay.
We built our own lending. We built Carrot Lend, and
Oh.
so instead of Carrot protocol, Carrot liquidity
Yeah.
looks at the market and sees all these what we call lending venues, right? So the Camino JLP market, the main market, the alt market,
Yeah.
USDC, USDT, I mean all of them. And now in that mix we have Carrot Lend is part of that. It says, hey, here's the yield venue. And the unique thing that we could do because it's vertically integrated, and what I mean, maybe I'll break that down. What does vertically integrated mean? Our lending market is built based on the principle of just-in-time, single-sided liquidity. So most lending markets that you're aware of are like pool-based AMM type. You're attracting both suppliers and borrowers. Their supply demand curves, everything there. But for us, Carrot liquidity is the only supplier into Carrot lending. So it's the only way that money gets in there. So we don't have to court suppliers. Carrot Lend is always the supplier there. And we're doing just-in-time liquidity, meaning when a borrow request comes in, we are matching that directly so that we can operate at nearly 100% capital efficiency.
Very
So
cool.
if you're familiar with like Loop Scale is great. It's like a whole different model for like order book lending. Um, great in theory. I think there's some real drawbacks on like the depth of liquidity there and like how you show like, okay, you might show that you have this rate, but there's really like $3,000 there, and like how many assets are really paired against it? What's the risk profile? It's daily, just a lot of variables in there. Um, and we see what we do is almost like the best of both worlds, where we get to operate at 100% capital efficiency because we're only paying like uh, when you see these large spreads in lending markets, we call that reserve rate. And that reserve rate is there for good reason. It's not just profit. Camino's not just saying, "Hey, we're paying out 5%, we're charging 12%. Ha ha ha, we're just making a lot of money off you." 100% of the supply in a curve-based, AMM type lending market gets paid, right? So if there's $10 million in there and they're offering this rate, all $10 million have to get paid. It's fungible. I don't know if my dollar got borrowed versus your dollar got borrowed. It doesn't matter.
Yeah. Yeah.
But based on
Gotcha.
that utilization, maybe 80% of the money is actually revenue generating. And so that 80% has to cover the 100%.
Yeah.
And so this is where like you have to have a spread. It's not just profit for sometimes it is, but you know sometimes it's not. Like you got to pay all of your supply. Um, and for us, by not having to pay all our supply, because in theory, like if we set a cap, we say, hey, we've got 5 million available here. it doesn't mean that it's sitting there not being borrowed. What it is actually it's in our aggregator. So it's being lent out everywhere. And because we can use atomic transactions, and atomic transaction just means like within the same transaction, the same request, we can pull the money out of Camino or MarginFi in order to make that liquidity available for the borrow on Carrot Lend to like start earning there. So that gives us an incredible advantage where we can actually charge lower rates on our borrow than anybody and pay higher rates on our supply than anybody. And even at a 1% reserve rate, that's still actually a straight profit for us. Um, because again, 100% capital efficiency, we're like, we don't have unpaid capital over here that we have to like account for. And
That's cool.
so,
Let me, well, keep
yeah,
going, and
no,
then
no,
I'll
no.
ask my dummy questions.
The basis of like Carrot Lend is like, okay, that's our advantage. It's just in time, single sided liquidity, lets us then build demand products for like how do you get people to like borrow, right? Where does the borrow come from?
Yeah,
Well, you build
yeah,
products like you build like Boost, you build JLP looping, you build other types of DeFi
yeah,
products built exclusively for Carrot liquidity, which are going to have better economics than anywhere else because our lending markets enable that. And as a result, the overall rate for CRT now goes up because we are paying higher than market rates for our borrows, and we now have this revenue stream, which is good. You should want your DeFi protocols to make money, and it's sustainable and helps them stay around, right? Profit
yeah,
is what lets us continue to build. But
yeah,
we can start to share that protocol level revenue with our holders where we're not paying 4% out, we're paying 6% out. And like you're not waiting to get compensated for the extra 2% on points or whatever. You actually got paid that. Like you got compensated for the risk that you were taking, which we think kind of kicks off this flywheel as it starts to work. Is hey, these are better DeFi products. The economics are better, and hopefully there's some UX things that make them more enjoyable to use. There's stuff we
yeah,
focus on there.
yeah.
That increases our rate. Increasing our rate is the number one thing that leads to more CBL coming in. More liquidity makes those products better. Products better, give us better rate, makes them better.
Yeah.
This is the flywheel that we're looking like kind of kickstart.
This is the chicken and the egg. You're getting
Yeah,
there.
yeah.
That's so. I mean, a couple things. Awesome. Really like it.
Thank you.
Seb said it as well. Your guys' UI UX is really nice, and from what I understand, that's a lot of your bread and butter. So good
Yep.
job. Um, the thing. So a couple of questions I want to try to break down.
Yeah. What you got?
CRT in itself is kind of like a liquidity pool because it's a
Oh yeah.
representation of USDC and USDT.
Mm.
You guys are saying, okay, Carrot 1.0 was, aggregating around trying to get best rates. 2.0
Yep.
is now we're going to build and we're going to vertically integrate and we're going to do our own lending protocol and we're
Yep.
going to get you better rates because we're going to lend for it. And it's not really about like asking people's permission. It's just people have deposited it and you're making use of it. Is that kind of like working in the right direction?
Yeah. Yeah. Spot on. It's like when you first deposit into Carrot, you're kind of trusting the algorithm and the methodology that we kind of put forth, which is yield aggregation of, hey, it's the top protocols that you would use anyway. We're just guaranteeing that no matter what, we're getting the best rate. And kind of
Yeah.
offering as well like this 24/7 risk management and monitoring of yes, there's extra protocol risk because we integrate everybody. However, you're getting this protection layer of somebody who's going to respond and like monitor and watchdog this 24/7. And in the event that something happens, one, we're going to detect it earlier, just like with our data ingestion. We're going to see these things happening before you're ever going to read about it on crypto Twitter, and
Okay.
imagine that you're going to connect your wallet to like log like withdraw stuff. Like I don't know, we've done something like uh, if you look at our volume, technically of like our moving of money, I think we've done 600 million in volume,
Nice.
but that's
Cool.
just moving the same money around, right? This like that's
Sure.
not a real metric. But what I'm highlighting there is that we're going to get that money out before any person is going to get it out, and so it's not foolproof, whatever. But it is saying, hey, we're giving this like extra layer of risk management and monitoring where we're like 24/7 actively doing this, and that's kind of like the promise that we're giving you. But we are capital allocators, like we are even now, right? The fund is kind of 80/20 split between yield aggregation between all the lending protocols. We've got about 10%, 11% in insurance funds. which just
Oh,
ends up being a higher APY. It's a lockup, and so we you're getting compensated for that time lock. And then we even still currently, we didn't touch on this earlier, there's some exposure to like trading strategies. So there's some hedge JLP, delta neutral hedge JLP as well in the
okay.
mix,
Okay.
which we partner with Gauntlet and Neutral Trade as our methodologists and our risk management over there.
Oh, cool. Smart.
We technically like tokenize drift vaults, which is kind of cool. We might release that by itself, where like all those drift vaults of those methodologists and those providers,
Yeah.
we can tokenize those vaults and they work just like CRT, but basically it's just the vault in there. It's very cool.
Very
Um,
cool.
you might not realize like the token of CRT, what it is at the end of the day, is like it's an accounting mechanic. Like that's what it's like. It's a superpower, right? There's a lot of things attached to like composability and transferability and fractionalization and all this stuff. But really it's an accounting mechanic of like what's the value? What's the net asset value, the NAV value? Uh, yeah, there's a lot of cool stuff that like once you start peeling back layers, like, oh, this is kind of like this. Oh, now that we have this, we can actually probably do this. Like, oh, can we make a soul version of CRT? Like, yeah. Really, Carrot is a protocol. Issued CRT as our first product. Um, but it's like a tokenized hedge fund generator. Like we
Yeah.
could issue
Yeah.
lots of tokens. The
You
methodology of what
must.
goes into the token could be varied, but there's a lot
Yeah.
of possibility there.
And you're sort of like you're proving your code and your strategies
Yes,
with the
yeah,
least
hardening that.
volatile asset.
Yeah.
It by definition shouldn't change in price. Therefore, you're trying to reduce the amount of metrics you have for attack vectors, which I think is smart.
Yes.
What do you think about like this new proving ground for real world assets and
Mm.
institutions, treasuries? Like, you guys must be kind of chomping at the carrot, thinking that's a whole other pony. Now you're not just talking about existing, degens shopping around looking for best rates. Like, now you're talking
Yeah.
about institutions and institutional money.
Yeah. We spent a lot of time and still debate this internally. Of we made a pretty conscious choice not to be a yield bearing stable. And sometimes I don't know, I stop correcting people about it because if it helps frame and understand what we do as like a yield bearing stable, so be it. Um, but my opinion is like stables are
Oh.
stables and not yield bearing. And that we
Oh.
have yield bearing tokens, and that all these RWAs that are like yield bearing stables are really what they are is they are yield bearing tokens that are backed by
Hmm.
treasuries. Um, and the reason for it is Carrot should feel more like a money market account in a way, or like
Hmm.
frankly like a perpetual bond, if you want to get more technical on it,
That's hitting. This is hitting.
rather than a stablecoin. Because what is it like? What is the really unique position of a stablecoin? It's like purchasing power and like using it places, and it just felt wrong to try to like usurp and supplant USDC and USDT as like the transfer currency of like, oh, I'm just going to use this instead of a dollar. I'm going to use yours. Like that felt like a
Yeah.
tall task. Um,
Oh yeah. Oh yeah.
and so starting at $100, right? This is why we started at $100 instead of $1, so you didn't get confused with thinking this is a stable coin.
Very
It
smart.
also helps as
Wise.
you move that decimal over, you see it move faster, right? So you like if it was $1, like
Yeah.
you'd be seeing tenths and hundredths and thousands of a penny go up, rather than now you see like 10 cents go up, seven. Like you see it move a little quicker,
Yeah.
which is
It's a real.
nice.
It's a real thing.
But what we really hope, and here's actually a really fun part of what CRT represents, particularly for like treasury holdings and even like centralized exchanges, is like CRT is a representation of like DeFi, the DeFi yield. You can almost think as like the DeFi prime rate of stablecoin yield. And because by it's a token that you can hold passively, it's like a passive instrument representing an active management strategy. And think of in a centralized exchange, like one of their big worries or things that they frankly like try to do is once dollars leave Coinbase and go into decentralized finance, for the most part, they're gone, right? What's the one thing you can't do within a centralized exchange? You can't do DeFi. You can own tokens, they can whitelist stuff, they can pull stuff in, you can do it that way, whatever. But like you really can't do real finance
What did
activities
I saw
inside of that.
crypto.com just added a Camino pool
They did, yeah.
as like the first of their kind. Crypto.com. But anyways, carry on. I'm not getting any sponsorship there or
uh,
anything.
but in there, essentially, by holding a token, which you can hold in your treasury in your cold wallet by a custodian, you now are doing DeFi within
Yeah.
your centralized holding.
Yeah.
Um, and that's super cool. Like, and we might still be pretty simplistic on the strategy that represents now, but there's nothing that says it can't be a lot more than that, which we think
That
is
is
a pretty
cool.
exciting deal.
That's really cool. You struck a couple of good chords there, and I like made little notes to my podcast there because it's true. You're not trying to be a stable coin.
Right.
You're building something more than
Though we
that.
are very stable.
No, you're very stable. Check the chart. It's true. Good. Yeah, and I like this whole DeFi prime rate. Like correct me if I'm wrong, but it seems like your memorandum is to risk adjusted be a representation of the best yield you can get on chain in Solana. And you
Yep.
can do that simply by holding the Caret token.
Yep.
And does that mean in the future you guys are going to try other things, maybe different strategies, different asset classes? And will that mean it stays with the Caret token? Will it mean another
Mm.
token? How do you guys kind of look at that kind of right now? Because maybe you don't
Yeah.
have the
Great.
answer.
Great question. Very future looking. We yeah recently just talked through a lot of this stuff. Or at least I stay up at night thinking about all this a lot. um, but you said something earlier that's actually very, very spot on. In fact, I had heard it, nobody else has made this connection, so this was great. I loved hearing it. Is CRT is almost like our version of JLP in terms of like it's a liquidity token. It is the liquidity layer for Carrot DeFi. Like
Yeah.
Like Carrot itself is moving towards yield engine and yield ecosystem, not just CRT. When we started, we made a promise early on and said, hey, like we want to remain a
Mm.
single token as long as we possibly can. Carrot is
Mhm.
a protocol. Carrot protocol issued CRT as the first product, but I knew that the success or failure and reputation of our first product would define who we are. And so I wanted to like be laser focused and like make that as the best possible version we could. We needed to
Yeah.
scale the protocol, harden the protocol, work on the edge cases, so that if we ever did release more stuff, it's moving into an infra setup that is hardened, scaled, ready to go, can really hold it. Um, and so where we're going is, and this is almost like phase three in a way, is I think one of the hardest problems in DeFi is like trust and discoverability. How do you trust something? Uh, your favorite influencer told you to use it, and that's like good enough for some people. Like, there's
Yeah.
people I trust that like, hey, you
Yeah.
checked out this and the founder and like, okay, I'll throw $100 in there. Okay, I'll throw $1,000 in there. Okay, this is legit. It's growing, whatever. But discoverability is like super challenging. There's 1,000 products all over the place. How do you know? There's people yapping all like, how do you know? How do you know to trust anybody? And for us, like our hope is that building DeFi, a suite of DeFi products exclusively for Carrot liquidity that have the advantages of the economics that we talked about, also helps solve some of this DeFi discoverability and trust problem. That if we can move towards like owning the user relationship and saying, hey, we are a trusted source for you to do all these things that you didn't know you could do before, really participate in decentralized finance. Um, Over time, when we release those products into that pipeline, that distribution that we've built, you now can trust that product. Like we've built that reputation and like using that to say, hey, these products are trusted, they're better. I would rather use this one than the one-off that some other team just launched through a hackathon that I don't know where they are. They only have 100,000 TVL. I'm not really sure. No, I'd rather like use your version of that. Even it's the same thing. This is like frankly the super app thesis, and I think it's smart like what Jupiter's doing because
Yeah.
they're solving the same thing of like, okay, it's
Yeah.
Jupiter, like it's in their mobile app. Discoverability is they put it in front of me, and has Fluid existed for a while, not that long actually, but like available like other places or like the idea of what they're doing for sure. But like what mattered was a trusted brand put it in front of you and made it available and easy for you to use.
Yeah.
And I think
Yeah.
that's the direction we go in as we move forward. That then, to answer like the question you asked specifically, gives us the platform and the range to start to release more tokenized products that
Yeah.
represent different risk profiles.
Yeah.
My fear is if we start releasing different risk profiles right now, it makes the product confusing and puts us right back where we felt was the problem with DeFi UX in the first place of you log in and there's 50 token options, or what's the difference in this pool and this pool? You go look at Yearn right now. Try to tell me the difference between the 7 pools that seem to have the same assets offering the same things with variable rates, and what the hell is it? I I don't know. Um,
That's
and
good.
it felt like it kind of put us on that same path if we just started releasing different risk profiles. Um,
Yeah.
and very hard thing for any crypto founder is like understand who your real user is and not be swayed by more sophisticated users who might have great ideas and you might want to serve them in some way, but the product that they want and need might not be what your actual user base wants and needs. Like if we released, I don't know, people wanted us to release. I talked about the Hedge JLP Vault token. People like wanted us to like package that up and like let them buy that directly and like make their own mix of all these things. It's like we could do that. However, we made a promise to say single token as long as we could, because otherwise it gets hella confusing for everybody.
Yeah.
Um, and so as we transition the Carrot brand into being like Carrot, DeFi of like DeFi products, not just CRT, that gives us the space to expand that product line in a responsible, curated, thoughtful way that represents those different risk profiles. Where like CRT itself is going to be like your baseline, least risky, stable coin, up only. It's the liquidity provider for all this stuff. You're earning outsized
Yeah.
yield. This is great. Hey, if you want to take a light active, one click automated managed type product, which is Boost, people love these. I think that's a huge future of DeFi. You know, everything that's coming out is all about one click deposit into some sort of automated, managed, configured strategy. I'm gonna
Yeah.
smart money. We call these smart money strategies. These are the things that like traditionally
Get me
hedge
some
funds have
get me
always
some
done.
leverage.
Put a little leverage in it, automate it, think that the computers are going to save you to like find an edge to like make money.
Yeah.
Um,
Yeah.
you can take those active management positions, you can do that, and that again allows us to start to release more things that said, hey, you can kind of choose your risk profile, you can kind of tailor your results. But our hope is that through a unified reporting and like reporting is uh maybe more simple. Like people love like unified data reporting views, portfolio tracker, stuff
Yeah.
like that. Like our hope is that
Yeah.
that then makes it just painful enough to say, and I'd like rather like stay here. Like I like it all being one spot. I like building loyalty here. I like that they're going to
Yeah.
reward me for that. I like that um, I'm not just the liquidity, but I'm also supporting the protocol of like the Linux protocol, and like I'm getting a share of that. I'm a big believer and participant of the brand. Hope like this is where we're going. With Carrot, because again, just being an aggregator is not a sustainable business model, and the positive EV is not there anymore. It's not. And if anyone tells you otherwise, of like save different and like always be earning the best rate, notice like they're starting to compare more to what your TradFi bank rate is and not like what the
Yeah.
DeFi rate is, because it's
Talk
below the
about
DeFi rate.
treasuries.
We're all beating that, right?
Yeah.
Uh,
Yeah.
and again, make DeFi easy and accessible for everybody, and build brand loyalty, help solve the DeFi discoverability problem, build trusted
Yeah.
products, all this good stuff starts to like really pull together
Yeah.
an ecosystem you can believe in, not just this like one-off. Oh, like that's like CRT is a one-off. It's cool, but it's I don't know. It's not groundbreaking. It's not super novel. It's not like, oh, I'm jazzed about this. If anything, it starts to like sink into the background, instead of
I
being like a
like
product people love.
I like the ambition, and I think that there's a real opportunity, and I'm happy to hear you sort of talk it through that you guys see the opportunity and you're not going to rush into these other desires, because there's a real world where CRT becomes like a JLP, and
Hmm.
JLP is its own beast.
Yes.
Jupiter does all of these things and it uses JLP, but like it is set, it's coded, it does its thing, it cooks, people trade against it, and that's how it is.
Hmm.
CRT for you guys, I could see this becoming another thing for itself. It becomes its own thing. You lock it in.
Hmm.
Maybe you never change the parameters or governance does or whatever, and then you carry on. And then you can be really thoughtful about what is that next product because you don't want to just end up with, oh well, that was kind of shitty or that was kind of shitty. And like I
Yeah.
see that you're like you're thinking really hard about, let's be smart about what the next banger is.
Well, here's the thing that keeps me up at night is, do people care? Do people
Hmm,
want this? Do people want a better
true.
version of a JLP loop? They might not, to be honest.
Hmm.
Uh, and there's this element, like we went through this, man. It was back in December. It was a while ago. We had like stagnated at like 5 million in TVL, and I just felt like, man, I've lost connection with the user of like, what do people want? And through some soul searching and some talking and just being more open, and asking more questions and everything, like uncovered some stuff of like, man, we made it really hard to understand your performance, right? It's almost like we exported it like it's a token. This is easy, but that also just put the responsibility of other platforms to display and show. And so we built a P&L tracker,
Hmm.
and made it a lot easier for you to see the benefit. Like we were missing out on the dopamine benefit of CRT
Hmm.
going up. Um, Likewise, there are times when you start connecting the dots, and you can be on podcasts like this, and you like saying, "Oh, this is interesting. Oh, because of this, this becomes possible. Oh, we could do this. This just-in-time liquidity. This is great." Most people don't care. And the thing that keeps me up at night is, man, what do people want? What do they need? What pain points can we really be solving for them? And who is that user? Because sometimes it's frankly not crypto Twitter, unfortunately. It's like the one we
Yeah.
know the best and we see all the time. But those people are
Yeah.
kind of masochists who like want to point farm and want to try everything and like want to click the buttons and manually keep
Yeah.
their spreadsheets. They get off on that. And that's great and that's fine. But our user is the one who like doesn't want to do that anymore and like wants the
Yeah.
easy life. And that
I
person is the silent majority that you don't hear about on Twitter.
I think you really got something with that like DeFi prime rate. You know,
Mm,
if you guys can be that risk adjusted
hmm.
easy mode that shows it, you can be on Robinhood, and Robinhood has this, oh here you could just click to Carrot, and Carrot is
Yeah.
everything going on in Solana, and you're like, oh I heard about that Solano. And
Yeah.
yeah, my kid was talking about it. I'd like some exposure to that.
Yeah, and not just the
There
speculative
it
token
is.
Solana, but like the
Yeah,
non-speculative asset,
yeah. The
version of that.
on-chain activity. Then,
Yeah.
and I think there's something really there to that.
Well, what's cool is we see now, and we always thought this would be true, and glad to see it come to fruition, is there's a lot of builders building with Carrot, right? So a lot
Cool.
of new products are like, I need a business model. Okay, yield is a good business model if you're like doing pools or all these yield bearing cards. We even have a card program that we'll release. Hopefully we'll have the time to like really build that out properly.
Nice. Very cool.
Um, where people are using Carrot and saying, "Hey, like it's a token, so it's super easy to integrate and
Yeah.
use." And now you can just show dollar denominated balances to your users. Use Carrot on the back end to earn interest. And because when you
Yeah.
go through Carrot, when you go through the protocol, there's no slippage. This is like an underappreciated fact because it's not a curve. We mint and redeem, and so like we guarantee at size. Like we've done, in one slot, like $1 million plus transactions in and out
Very
of Carrot,
cool. Very
because
cool.
there's no slippage, because
That's
it's a
sweet.
redemption. It's we maintain that it works, and so people building on top of it can do that, trusting that they're earning yield, and it's super easy to integrate with because it's just a token, and we think that's really cool. Like, yeah, like that's the vision of if you
Interesting.
are the prime rate and you represent that, but not just like a data reporting because there's data feeds out there that'll give you like the prime rate, but it's like a useful prime rate. It's like
Yeah.
you had access to the prime rate and like the benefits of it, um,
Yeah.
which
The
frankly
liquidity that comes with it.
that becomes, I think, more real. We've scoped this out of our fixed yield program. Like adding fixed yield is what gives you a real prime rate because like this is what helps keeps you, not fluctuate and have a ton of fluctuation, is like being able to like be the counterparty to selling fixed yield. Um, like as the protocol itself. So like the protocol can begin to hedge itself with fixed yield products. That's coming down the line, but it seems to be pretty hot right now. Of like your Pendle and your RateX and your Sandglass and Exponent
Yeah.
and all these people selling this stuff.
Yeah.
Those end up being fairly risky, in my opinion. Like even like the loop scale
Sophisticated
hash.
too. Very
Yeah,
sophisticated.
very sophisticated, right? Might not be our user, but we can start to engage with sophisticated actors as the protocol that's not diluting the product, that ends up being just part of how we hedge ourselves internally through a fixed yield offering against
Damn.
CRT. Uh, which is again, it's kind of like you get the benefit of like somebody else who's sophisticated and knowledgeable in this area is working 24/7 to like keep CRT as valuable
Cool,
and
man.
connected as possible. And all you have to do is just hold the token. That's it.
I love that. I mean, listen, I learned a lot on this podcast, and I appreciate your time, sir. That was a smooth, action-packed hour. I'm not gonna lie to you.
Man, this is great. Like I do best of I talk through things. My team will tell you that maybe annoyingly that I want to talk it out. But it's really great even just to get reps. You got to talk about this stuff all the time and refine the message
Yeah.
and hear good feedback, great insights. Things that
Yeah.
seeing you like connect dots is like super
Yeah.
gratifying. Like gives us some confirmation of okay, yeah, this makes sense. This can connect with people, and so just
Yeah.
man, grateful for the opportunity. Thanks for letting me
Yeah.
speak my mind and checking
You
us
bet.
out.
You'll have some of my dollars, and I'll give you guys a good recommendation. I
Let's
look forward
go.
to it.
We
Yeah,
love
dude.
it.